But moving on we have SBI Life. We have the MD and CEO of SBI Life Insurance, Amit Jhingran, who's joining us on the result for SBI Life. As of now, the stock is doing pretty well in trade today. It's up almost 4.5% in trade. SBI Life that reported its numbers. Let's go across to the MD and CEO and see what he had to say.
Hello and welcome to ET Now. Today I am joined by Shri Amit Jhingran, MD and CEO of SBI Life Insurance, to talk on financial performance of year and quarter 4. Thank you so much, sir, for talking to ET Now. I'm going through numbers, so your results are in Q4 are better than the expectations. If we talk about the AP growth for the whole year is at 9% year-on-year basis. Net premium in Q4 is down. So can you tell us what strategy you have adopted, especially in the Q4, so the numbers are better than the street expectation?
So our performance during the year has been consistent. Just a slight dip in quarter 2, but over the year we have consistently grown, and our strategy has always been customer centric to provide right kind of product to right kind of people. As far as growth during the year is concerned, this is 9% as you said in APE, but on individual APE basis we grew by 13% almost. And this difference is because we believe in the business which is value accretive for all the stakeholders. So deliberately in the group business we suffered some market share loss because we found that it was not adding value. It was the kind of rate competition in the market in the group segment was not very conducive to the company. So we focused on individual APE and we grew by 13% in that.
Okay. And sir, what kind of impact you have seen due to the change in regulation? Because we have seen from 1st of October 2024, there were change in regulation, especially the surrender value rules. So what impact you have seen in H2 because of the change in regulation?
Change in surrender value regulation, the company started offering its revised products based on the new surrender value norms from the month of July and August itself, and by October all our product portfolio was revamped in line with the new surrender value norms. As far as impact is concerned, the company has a ULIP heavy portfolio which is like not affected much by the surrender value norms. Again, previously also our surrender value was much higher than what has been the industry practice. So overall impact on the surrender of the surrender value on business is not much. As far as experience is concerned, we will have to wait and see that how this surrender value after the first year premium pans out.
Okay, so you mean to say that on margins there will be not much of impact?
As of now, basis the assumptions, we have repriced our products in line with the new regulation, and the first 2 quarters you have seen that the margins are not impacted. We will see the experience after the surrenders start, if any, based on the new norms.
Okay, sir. Sir, if we talk about the product mix, you just said that you being a ULIP heavy, still your ULIP portfolio is of 64%, increase from 60%. So what kind of strategy is that you tend to increase it more?
So our endeavor is to provide customers choices in all the segments. As a conscious strategy, we do not want to be focused or be dependent on any one particular line of business, and in line with that thinking, we launched more than 4 products in the last quarter, from December to March, in traditional segment like participating, non-participating and protection segment. The response of the market to these new products has been good, and that has helped, especially if you look at the product mix in the Q4. The ULIP contribution in the total product mix has come down to 55% almost.
Okay. So going ahead, the focus will be on non-par products?
So we will be having a healthy product. We will provide to the customer whatever their actual requirement is. There is no conscious strategy to pull out any of the ULIP products or to push it down, but we will have a healthy product mix. So what we are looking for on IRP basis, 65% and the 35% ULIP and traditional portfolio mix during the year.
Okay, sir. And sir, if you talk about of your total APE, 61% of your business is through the banca channel. And can you tell us of this 61%, how much is through the SBI banca channel? And do you think if there is some sort of regulations come in, because we have heard reports about that IRDA may bring some regulations where a parent entity may be allowed to restrict their sale of business. So do you think that may have some impact on of overall, because you are very much dependent on the banca channel?
SBI is our parent bank holding 55% stake in the company and is our dominant banca channel partner also. Out of this total banca business of the company, State Bank's contribution is almost 90%. Having said that, our distribution mix of 60-40 is not very skewed, and we are, you would have noticed that we are focusing on improving our agency channel also. And last year, the agency channel has grown by 23% on IRP basis. So that will reduce our concentration risk on banca. But having said so, there are a lot of opportunities available in the banca, and I am sure that this banca channel being the least cost option for the distribution will continue to play a major role in the growth of insurance industry.
Okay, sir, will continue to play a major role, sir. On a VNB margin front, sir, your guidance was of 28%. You are presently at 27.8%, slightly below the FY24. So what is your VNB margin target for the FY26?
If you look at the VNB margin journey during the year, in the fourth quarter, our VNB margin was 30.5%.
Okay.
That has pulled up our VNB margin for the entire year compared to what we reported for 9 years. And this is in line with our guidance that we had given at the end of second quarter and third quarter also. So we are very mindful of the margin accretive business, and we will ensure that we stick to our guideline of around 28% in the coming years also.
You are confident about that?
We are very confident here.
And do you think that to achieve that you will need to do some sort of more changes in the product mix?
So product mix, as I already told you, that we are looking at a 65-35 kind of ratio between ULIP and non-ULIP portfolio, and we are sure that